Hello, everybody, and welcome. I am Dr. Richard Smith, and I am here again to answer your questions brought to me by my good friend Josh Rhodes from Rhodes to Wealth. And Josh, it looks like we have had a lively week. It's been a lively week in the markets, so lots of great questions. I'm excited to dig into it, and let's do it.
Yeah, excited to be here. New location. It's been a lively week for me as well. I'm in Denver, but excited to be here. I wouldn't miss it. So as you mentioned, we have lots and lots of questions. I vote we just kind of get the ball rolling, man. I've got lots to unpack.
Let's go.
I wanted to start with a question submitted by Phoebe, and I've found people are particularly interested in how you deal with sort of your own personal portfolio and how you make decisions. They're trying to get in your mind a little bit, and I enjoy those questions. Phoebe asked, how does Richard track his overall portfolio? Are you using the sort of traditional Excel document for all the assets and what you've invested? Do you have one of the newer apps like Personal Capital or Mint? How are you maintaining visibility into the overall portfolio today?
I have my main portfolio at TD Ameritrade. I've had an account there for over 20 years now. I try not to watch the market too much intraday. I think that watching the markets intraday is bad for your wealth, certainly bad for my wealth. And so, I'll check on it a couple times a day, just open up a web browser, see what's happening, see if there's anything that I really need to pay attention to, and then look at it at the end of the day, kind of as I'm wrapping up my day, take a look at what the market did overall. I read a couple of things each evening or the next morning when I get up of kind of market commentators to just make sure that I still have my finger on the pulse. And other than that, I try to do other things.
Yeah, I think I may even ask you to expand a little bit on the individual sort of information gathering sessions. A follow-up question actually from Phoebe was, once you've landed on a ticker and you've pulled that into your portfolio, what do you do to track that moving forward? Do you immediately go to LinkedIn and set up like LinkedIn alerts or Google alerts? Do you sign up for their investor newsletter?
No, I really identify a few companies that I'm really interested in, and I've outsourced that part of my decision making to other people that I really trust, right? And then I combine their insights and their tracking of that, and I use my technology and my algorithms to make sure I have an optimal collection of those return streams. I love that way that Dalio characterized them, right? So, I really am looking to either the 13F gurus that I'm following via Whale Wisdom or the newsletters that I'm reading. And I basically say when they sell, then I sell. But until then, I sort of narrow my selection, build a holy grail portfolio of 12 to 20 good uncorrelated return streams. And I really outsource that decision making around what's going on with that company to somebody else who's really focused on that.
Yeah, you're hitting on exactly what she was asking. Like, what's going on? What I wrote down was staying up to date, right? She's trying to figure out how are you staying up to date. And speaking of staying up to date, you and I shared a few emails. We spoke about this offline about the original Holy Grail portfolio that you put together for us in the masterclass. For those that weren't involved in that, just a quick reminder. Richard actually went through, pulled together a Holy Grail portfolio. Like you said, it was 15 individual uncorrelated stocks using your 7 principles of investing, plus a little data from the app that you've given us access to. And from that, I was wondering if you're comfortable maybe sharing a bit about how that portfolio has performed since. I mean, last week in the last Q&A, we talked about how we just saw one of the worst investing days since last October. We'll even include that date in this, but how has that original portfolio done since we've seen it?
I would love to share that with you, Josh. And let me pull up a spreadsheet that I was just looking at. So this is the performance of the Holy Grail portfolio starting from July 1st, which is about the date that we introduced it, through the month of July. And it's the blue line here, okay? The gold line is the NASDAQ. The burnt orange line, I guess, is the S&P 500. And the gray line is the Dow Jones Industrial Average. So maybe a better way, yeah, no, we'll stay here. But basically, we're not starting at zero here. We're starting from where the portfolio was as of July 1st, based on a start date back in 2020. But over the past month, you can see this blue line has done exactly what we wanted it to do, which is has less volatility, less variation, and ultimately more reward. So less risk, more reward. And if we look back to, it was not this Monday, but the Monday before last, right? So that was probably, must be about here, like the 19th, I think, when the market, the S&P 500 was down like over or 1.5%, like 1.6% on the day. And this portfolio, this good uncorrelated return streams was only down about less than 0.5%. So that is, dreamy performance. And when you have less risk and more reward, that's exactly what we need to be able to do as investors. So I'm really excited with how this is performing so far, doing exactly what we built it to do. And I think it's great.
You and I both. There's something about, I mean, we could talk about it till we're blue in the face, but there's something about seeing a graphic and seeing that compared to the things that we typically try to put our portfolio against, and to see what you're really doing is removing volatility, but in layman terms, to be able to see that line lose all the rigidness and just a smooth up and to the right trajectory. It is a very good feeling to see that on a graph.
It's a good feeling for me too. I spent a lot of time and effort to get this methodology to where it is today. So to really have, put it out there in the public, used it to put together a real portfolio and see that portfolio doing what it's supposed to do. That's really exciting.
Yeah. I had Jay submit a question, and I'm going to paraphrase a bit, but he was really asking, is it always this easy? Just investing wise, he says, it feels like we're in an everything bubble. And I'm going to read his question verbatim. He said, we've been shut down for more than a year, but the stock market has continued to gain momentum and strength and move up. How long do you think that we can keep this quantitative easing to infinity money creation going? And are we in some sort of everything bubble today?
I do think we're in an everything bubble. I think the market is being driven by the Fed's liquidity, by the stimulus. We saw some numbers come out yesterday that the economy wasn't quite as hot as the market anticipated, and that bid up the market because it meant that the Federal Reserve would not tighten sooner rather than later. So that's the nature of the market that we're in right now. I don't think it's a great way to create sustainable wealth creation, but that is the market that we're in right now, and that is, the overriding consideration of the big money flows in the markets. And yeah, it's an everything bubble, and it's unnerving, but that's one of the things we can't control, and so we have to make the best of it.
I think Thomas, by the way, this may be my favorite question that I've had the chance to read off yet. Thomas, who's a 23-year-old, he's actually gone through the masterclass. He's had access to your app. He's really trying to get his hands in this. He says, I don't have much money that I have left over at the end of the month that I'm able to invest and start to create a portfolio, but I know I need to get started. He's excited to start investing. My personal question is, should I allow the allotted budget that I have affect my investment portfolio or the portfolio that I'm building? He said, many people point towards dividend stocks. And if I own 2 or 3 stocks, they give me 27 cents. That's not a needle mover in any case. So me having just a little bit of money left over at the end of the month, should I try to get more aggressive or more risky today in an effort to build more money and then build this sort of holy grail portfolio? Or do I build that now and just at the end of the month, try to add to that until, years down the road, he's got an actual massive portfolio to look at? I think there's two routes there he's asking for.
That's a lot, but look, there's a fantastic broker dealer out there called M1 Finance, M1finance.com. They allow you to put together a complete portfolio and to buy literally like pennies of that portfolio at a time and distribute it across all of the assets in the portfolio with the percentage allocations that you determine. So I actually met the founder of M1 Finance like 5 or 6 years ago. We were both at a Finovate conference in New York City. They're a unicorn now. Kudos, Brian Barnes. If by any chance you see this, great job, man. So M1 Finance is the broker dealer that young people should be using instead of Robinhood. They are focused on long-term value creation for their users. And that's where you can set up a holy grail portfolio and you can add $1 to it a day and spread it across. So check it out. I highly recommend it.
Yeah, I've not heard of that either. That's a pro tip there. Being able to allocate this percentage wise across the portfolio you've already built with lower lump sum. I love that, man. I will check that out as well. Yeah.
And Brian is doing a fantastic job. They have a great newsletter too. They really are focused on the right things. So I'm a big fan.
I'm going to make an effort to slowly ramp this up. I first thought about saving this question to the next week and maybe kicking off the meeting with it to get you pumped, but I'm going to plug it in here. A question submitted by Eric. I'm going to read this verbatim because it requires that. Okay. He says, I know Dr. Smith is not responsible for the market being rigged or market rigging, but I would like for him to address this. He says, when insiders like Nancy Pelosi can buy and sell stocks without any penalty at all, how can anyone have confidence to invest in the market? He said, could great performing investors have insider connections helping them?
This is a tough question. I sympathize with the sense that the stock market is rigged. I've been a big critic of how market structure is working today. I just came out with another piece yesterday, The Day the Internet Died, Part 2, subtitle, What's Under That Hood? So, in other words, Robinhood. So I get it, I've just seen these things like a concern about the markets being rigged and a fear about when the market's going to crash as being more destructive to wealth creation for the individual person than the reality of those fears. It keeps people out of the market. It keeps people from actually having a positive influence in the market. The market is bigger than any of us. It's bigger than Nancy Pelosi. It's bigger than the hedge funds. And there is a legitimate place for individual investors in the markets. But it's one of the reasons that I try to shift us to longer term investing, because I think those things come into play more in the shorter term, which ironically is kind of where a lot of young people are focused today. And I think our real leverage is actually in years, and decades. I think it was Warren Buffett or Charlie Munger who said, in the short term, the market's a voting machine, and in the long term, it's a ranking machine. And so if that is where we're going to grow our influence, is through the long-term holding, having a holy grail style portfolio, not getting drawn into an arena that we can't really effectively compete in. So, there's a lot of dubious, questionable stuff that goes on in the markets. Don't get caught up in it to the point that it keeps you out of the markets. Focus on longer term investing. That's where your leverage is. That's where you're going to stick it to the man. And don't worry about Nancy Pelosi.
Yeah, I love that answer. There's a lot to unpack there. I know I've got questions in front of me, but I love that answer.
It's true.
We've heard we've heard Robinhood, at least in your last 2 or 3 answers here, and I was trying to save it to the end. As we know, they went public yesterday. From my understanding, pretty terrible IPO day overall. I wanted to just maybe put it in your court one time of any thoughts, anything just brewing inside of you over the last 24 hours you want to get out?
I said it all in my piece yesterday. That was actually quite cathartic for me, but I also think I said something really important, and we don't have time to go over it in this Q&A. Maybe next week we could spend a little more time on it, but I showed some visuals that I think everybody really needs to understand about what are the types of episodes that really drive profitability for companies like Robinhood, and what kind of world and what kind of markets are we creating by encouraging and facilitating these events, because they're profitable for the platform owners. So it's a really serious piece. I feel like I finally said something that I've been trying to say for a long time, and I've been talking around the edges of it, but it feels like it really kind of clicked into place with some visual support. So I'd encourage everybody to look at that. And look, I'm conflicted about Robinhood. I love the fact that they've brought so many young people into the market. I sympathize with the CEO. He's up there with his, infant daughter yesterday, ringing the bell at the NASDAQ. Good for him. I just think they have such a opportunity and a responsibility. And I think they really got to change their revenue model so that they're not profiting off of this kind of, YOLO options trading madness that the individual, trader is going to have a very hard time competing in.
We will, I've jotted this down. We'll put a pin in this and I'll bring it back up next Friday. We can actually dive into some of the visuals. Looking forward to tearing that newsletter apart, by the way. Let me close with this. I mean, you said it at the sort of introduction of this. There's been lots going on the last 7-10 days. One of the most interesting things, in my opinion, is I read this newsletter of yours early on about NFTs and the excitement and the energy that they were gaining. And I think they saw a pretty significant drop off, at least in the amount of buzz and writing and info media that we were getting. This past week, though, OpenSea, who is a NFT marketplace, one of the bigger ones, actually raised $100 million at a $1.5 billion valuation. This is the first NFT unicorn that we've seen, which makes this very interesting. Yeah. Maybe it just opened the floor on general thoughts, not necessarily on OpenSea, but just NFTs in general. You have any thoughts here? Do you invest anything at all?
Yeah, I said back when the NFT, frenzy was going on, right? When they sold Beeple's piece at Christie's, for some crazy number, that NFTs are the real deal. This ownership, like custody of digital assets, is a new thing. It's a big deal. This week or late last week, I don't know, Elon Musk and Jack Dorsey and Cathie Wood all got together and talked about Bitcoin. And Jack Dorsey said, the internet needs its own money. And that's true. It really does. Like MasterCard and Visa and American Express are not good value exchange solutions for the internet. And also being able to have sovereignty over digital assets instead of them all being in the silos of Apple and Facebook and Microsoft and Google. And now Tesla, for God's sakes, if Musk really wants to support Bitcoin, like let people own all the data they generate in their Teslas that Musk and Tesla are putting in a silo to build their own AI engine for self-driving cars. No, pay your drivers who are generating that data for you. Let them have sovereignty over the data that they're producing, that they're generating. And we don't understand how valuable this data is that we're throwing off every day, data exhaust, that we don't think is valuable, but the big tech companies, they know how valuable it is. And all those, impenetrable, unreadable terms and conditions that they hit us with, that they just basically say, we get your data and we can do whatever we want with it. That's what it amounts to. And, that's what's happening. So NFTs are a big deal. Bitcoin's a big deal because they are the beginning of a new digital ecosystem in which individuals can have sovereignty over digital assets, period.
Gave me chill bumps, man. Any time I have the chance, this is every Friday now. Anytime I have the chance to be able to run through these questions and more so hear what's going on inside that brain of yours, it is such an honor, man. I appreciate you inviting me back, letting me ask these questions. This was really, really good.
Enjoy it, Josh. You do a great job. Thanks. And thank you everyone for the outstanding questions. Have a great week. See you next time.